here today again in my garden. Coming to you, it's a weekend, it's a rainy, snowy, it was snowing earlier, but as you can see there's no snow left on the ground now. Maybe tonight they think it might snow here in Portland, Oregon. It's warm enough outside I can change up the scenery a bit. Thought maybe it'd be good to do a greenhouse video outside of the greenhouse because I bet people are getting bored with that background. The video that I wanted to do today, or the topic I wanted to talk about today, is a IRS notice that I saw. It's called a technical advice memorandum about that just came out about employee meals on site on the premises of a company. And what this technical advice memorandum, what they call a TAM, was targeting specifically was the scenario that you see with a lot of technology companies where they provide meals, snacks and meals. It could be lunch or whatever on a regular basis. Often for some employers that's a regular thing. They do it daily. They're providing nonstop meals to their employees as part of the working environment. And what this TAM was talking about is whether you can actually do that and then exclude it from the compensation income of your employees. So, the theory there is, well, you pay your employees all kinds of there's different ways to provide your employees compensation. And sometimes particularly smaller businesses think, well, if I give my employees cash, obviously that's a W-2 compensation wage, but if I give them other kinds of so-called fringe benefits, then maybe I don't have to report that as wages to the employees. Obviously, I report it as a reduction to my business bank account and an expense on my company tax return, but maybe I can not report that as wages to the employee because it doesn't feel like wages. It's a fringe benefit. But the thing that you have to understand is that fringe benefits are not automatically not taxable. Double negative there, right? So let me say that differently. You have to assume that anything you give your employees as part of them working for you is taxable compensation unless you have a specific tax rule that you're relying on that says it isn't. So it's not a carte blanche idea that all fringe benefits that are not cash you can just give to employees and that's not taxable. You would have to assume the other way. You'd have to assume that anything that you give your employees is taxable compensation to them, where you would have to pay payroll taxes and they would have to and you have to withhold their appropriate income taxes from whatever you're giving them, whether it's cash or not. You start with that assumption, and then the analysis is, then you start looking for, well, are there exceptions? Are there certain fringe benefits you can exclude? And there are. There's a whole host of fringe benefits that are excludable. But to start with the assumption that all fringe benefits are excludable is completely wrong. You have to start the other way around. You have to assume that any benefit you provide an employee, cash or otherwise, is taxable compensation, and then if you believe there might be an exclusion, you need to find where that exclusion is in the law and make sure you're relying on a solid law that allows you, a solid rule or a tax law that allows you to exclude that item from an employee's compensation. So that brings us to the whole meals thing, right? If you are providing snacks and meals and these kind of non-monetary benefits to employees as part of them working for your company, that is compensation. And you shouldn't just automatically assume that it's not taxable to the employee, that you don't have to pay payroll taxes or that you don't have to put it through the normal W-2 withholding process, unless you've worked with accountants and lawyers to find the actual exclusion that would allow it to be excludable. Now there are cases where you can exclude it. So what the IRS technical advice memorandum was talking about is, when can you exclude? Under what circumstances can you exclude meals provided to employees? And the key issue, which has been litigated in many court cases, is that it has to be for the convenience of the employer, that there's a business reason why you're providing meals to the employees, a non-compensatory reason. It's not, the business reason isn't, I provide meals to employees because it makes them more happy and want them to stay and work for our company, which we all know is the primary reason a lot of tech companies do this, is because it's become an expected fringe at a lot of employers that if you work in a tech company, you're going to get these extra benefits. But that's compensatory reasoning, right? That is, saying I'm doing it to keep my employees happy. That's a compensatory reason. So in order to exclude it from their W-2 income, in order to not have to include it in their wages and do payroll taxes and all that, you have to have a non-compensatory reason for giving it to them. There has to be some business purpose to why you are providing meals, and it's not compensatory. It's not for the purpose of providing extra compensation or extra benefit or being more competitive in the employment market for those employees or for that talent. It's for some other business reason that you do that. So, and what's interesting is there was a court case that was favorable to the taxpayers on this, where in the past the IRS tried to argue with the taxpayers' reasoning, the company's reasoning as to what their business purpose was and whether the goals of that business purpose were reasonable or not. And the courts actually sided with the taxpayer and said, hey, wait a minute, IRS, you can't do that. You can't substitute your own business judgment for the business. If the business has a business goal and a stated policy, business purpose for that, then you can see that meals would be needed to achieve those purposes. You can't question the purpose or the goal and say the goal's not worthwhile. That's up to the business to decide. So the IRS has conceded that point, and what they're laying out in the technical advice memorandum is they're coming back and they're saying, yeah, okay, we agree or we understand. We can't question the goals of the business or the policies a business lays out to achieve those goals, but we can question whether providing meals actually is part of that policy or not, whether you actually have a policy that you consistently apply, and how providing meals goes forward to achieving that policy. So what this lays out is a roadmap of essentially 3 things you need to be able to document. If you want to provide meals to employees, you have to be able, and not included in payroll, that is, you have to be able to document essentially 3 things. Number 1, what is the business goal that you're trying to achieve here? What is the goal, a non-compensatory goal? And let me throw out an example there. One of the examples that is often used and was used in a successful case for a casino operator, for example, is that employees needed to stay on premises and that they had short work breaks. So it's often been cited, or that employees, really don't. They really it's for the convenience of the employer that the employees stay on the premises and need to be available for things that may come up, and they can't just be gone for lunch for periods of time, kind of thing, right? And so this is precarious. It's hard. I think it's hard to get there, but if I use that for context of kind of the 3 things you need, let's use that as an example. So the first thing is you need to have a business goal. So the business goal is we want to keep employees in our place of business for their for a certain chunk of hours, a chunk of hours that would span past a meal period. So, at least I would say more than 4 hours, right? And probably more likely you're kind of working on 8-hour or more shifts, right? So you're saying, an employee, for example, one possible goal is we have employees who work 8-hour shifts, and of course we're going to give them breaks, but we can't, because anything can come up at any time during that 8-hour period. Even if they start a break, we may need to call them back into work to get something done because some emergency happens. So we have a business goal to keep them available no matter what during that 8-hour period. Okay, so that's first thing. You have to be able to document that is a goal of your business, that you want to achieve that. And then you have to show that you have a policy to achieve that goal. Now, simply providing employees meals on site is not the policy, right? The policy is employees are not allowed to leave the premises, right? So you'd have to have a policy that would say something like employees are not to leave the premises during their 8-hour shift because there may be emergencies or reasons why they need to come back into work. Something of that nature, right? Employees must be available to cancel their breaks and return to work at a moment's notice because of potential emergencies. And maybe there'd be something in there of, if that happens, then they will take a break as soon as reasonably possible after the emergency is dealt with, right? Something of that nature. But those are policies, right? Once you have the goal of keeping employees available to you and the policies in place, and you have them written out, you show that employees have signed off on them, you show that there's something you do to enforce those policies, okay? Then you could have the third leg of it, which would be, okay, so in order to enact the policy of keeping people on site and available at a moment's notice, and maybe even to keep them from taking to keep them to shorter breaks because it's not reasonable. They can't take a break of only half an hour and get a lunch in our neighborhood because things are too spread out. That might be part of what you're getting at. Whatever that is, whatever that policy is, then you can layer in the food part of it, or the meal, and say, okay, as part of this policy, we are providing meals on site. And that is for the convenience of the employer in order to help employees meet this policy of the employer to meet the employer's goal. And so what the IRS was getting at with this technical advice memorandum is they can't challenge the goal, right? So they can't, if they go and they say, well, why is it your business actually needs employees on site all the time? Is that why is that even a goal? That may not be a reasonable goal for the type of business you're in. And let's be frank, it probably isn't a reasonable goal for a lot of the tech businesses that are having these meal policies, right? But one of the pieces, one of the interesting pieces, the nuances here is the IRS isn't really supposed to be able to challenge that point. They can't challenge the goal, and they can't challenge the policy either. So they can't really say, well, it's not a reasonable policy for you to require employees to be on site. We don't. That doesn't really necessarily help you achieve the goal. If they wanted to try to argue that a particular policy didn't lead toward the goal that you were getting at, they can't do that either, really. So that's where the IRS's hands are tied. But what the IRS is saying is, what we can do is we can see whether you actually have these goals and these policies, that they've been institutionalized, that they are working in substance, not just in form, and that the fact that you provide employees with meals is consistent with such a policy, right? So that's the whole key, is that they can't challenge the goal of the policy, but they can challenge whether providing meals are part of any such policy or not. So you've got to have all three legs of that argument documented and actually be operating it that way in order to exclude employee meals. And what's at stake here? Well, if you've been excluding employee meals from employee payroll, and you shouldn't have been, you'd be subject to a payroll audit, right? I mean, you have situations where the company could be owing back taxes and fines for not properly withholding payroll taxes, for not properly withholding employees' income taxes and reporting the proper gross income to employees on their W-2. So it'd be a hassle if you got hit with something like this from the IRS. So that's it. That's the topic I wanted to get at. What was in that same technical advice memorandum was some discussion about the ability to exclude kind of snacks as incidental items that weren't material enough to measure, kind of thing. And I think that might be an interesting thing to talk about, but I'll save that for another video. That way I've got more content to throw out there at you guys. Yeah, hope this is helpful and informative, and I will see you guys next time. Bye now.